Greetings, ladies and gentlemen. Hope your day was good. Today, I want us to learn about the various platforms that you can invest your money in. Investments can be done in two ways. There is a long-term investment and there is a short-term investment. Long-term investments are traditional things, like you start a business, you do real estate, you own matatus, you do farming, those traditional things. It will give you returns over many years. So the amount you invest, you may not necessarily get all of it in terms of return immediately, but over time, you'll be able to recover the amount of money you've invested. Short-term investments, on the other hand, this is where you invest money for a period less than a year. And this, within that 1 year, it should have generated you a return. What considerations do you make when you are making, what considerations do you have when you are making these investments? The first thing you will ask yourself, for how long do I want this money to be invested? The second one, you will ask yourself, what is the return that I'm getting from this investment? The third one, what is the risk or what is my exposure that I have when I put this money? And I think the fourth one, how soon do I want to get this money? Or how soon can I access this money should the need arise? For today, I will separate this into two sessions. We have long-term investments. We have short-term investments. Allow me today to talk about the short-term investments. In short-term investments here, we are looking at the money that you invest and will give you returns within a year. We have the traditional treasury bills or government securities. We have money market funds. We have deposits with commercial banks. And we even have funds with mobile phone companies. If you want to invest in government securities, treasury bills, you find that they mature in 91 days, 182 days, 364 days. If you want to invest in treasury bills, they give or they should give you the highest return. The question or the challenge that comes in, you need a specific amount of money to invest. If you want to invest, the minimum you can invest is 50,000 shillings. And after you invest 50,000 shillings, the government sells these treasury bills on specific days. Most of the time, they issue the bills on a weekly basis, but you cannot access this money until it has matured. If you want to access this money, you find that you only sell it in the market, in the secondary market. And in the secondary market, you will be at the mercy of supply and demand. Somebody will tell you, I will buy at this amount. You may find yourself losing the interest and also losing the principal amount that you have invested. You cannot invest less than 50,000, and the government will charge you to open what they call a DAO account, 2,500 to do the transaction. And if you are to invest 10,000 shillings, 10,000 shillings at a rate of 12% per annum, that is 1,200 in a year. For 91 days, that is how much? 1,200 divided by 4. That is 300 shillings before tax. So can you invest 10,000? The answer is no. If you want to invest in the treasury bills, you must invest above 50,000 shillings. And the amount you invest in should be reasonable enough to make a considerable return. The next item I want to discuss is the money market fund. There are so many companies or so many institutions that are offering money market funds. We have the insurance firms, we have the banking institutions, we have the mobile money platforms. If you want to invest in the money market funds, you will ask yourself, what is the minimum amount that I can invest in this money market fund? Can I top up as I would wish? If that is the case, can I withdraw this money when I feel like? And if I withdraw, do I lose my interest? Do I lose my principal? Money market funds normally attract they normally attract a withholding tax. I think even in the government securities, they will attract a withholding tax of 15%. On these money market funds, you need to ask yourself, the place I am investing in, is it stable? Is it regulated by the Capital Markets Authority? The institution that is doing this money market fund, how stable is it? You will ask yourself, is it giving me a return higher than the 91-day treasury bill? If it is giving you a return higher than the 91-day treasury bill, you then need to ask yourself, where I'm investing, where are they investing also? The next item that we shall talk about for short-term investments, these ones are fixed deposits by financial institutions. It could be fixed deposits by SACCOs, fixed deposits by banking institutions, fixed deposits by microfinance institutions. What are the returns that they are giving me? How soon can I be able to access my money? We also said the fourth, if I want to terminate my fixed deposit, are there penalties that are involved? The fourth one, and I think it's the last one, mobile money platforms. You find, I don't know the one for Airtel, but for Safaricom, we have M-Pesa ZD. I think we have another one. Let me just check. I will get back to that. There is this mobile money, there is also M-Shwari. If you invest in this, what are the returns that they give you? How soon can you access your money should you want to access your money? I would tell you, if you have money, don't keep your money either in your pocket, don't keep your money lying idle in your M-Pesa, don't keep your money lying idle in the bank account. Invest in this short-term securities. Wish you well. We shall continue about investing in long-term securities as in the next session.